Welcome back. You're watching Buy Now, Sell Now on ET Now. I'm sorry, I beg your pardon. It's Market Fatafat right here on ET Now. Not so used to actually anchoring from the studio, the show, isn't it?
We are used to sitting there, so I don't blame you for that. But yes, it's lunchtime, Cheryl. You should realize 2 hours have passed since the show. So
yeah, this is Market Fatafat, a show where we get you all the stocks buzzing based on news flow and on technicals. And talking about technicals, we have Kunal Rambhia joining us on the show right now. Very good afternoon to you, Kunal. And looking at the way how the market is moving, are you also actually forgetting which direction will TCS move going ahead?
Absolutely. Very good afternoon. So if I look at the overall performance of the market, it's been really robust. Indices are doing way different than each other, but TCS is contributing on the positive side. If you look at the counter today, it's up by almost 2% and it's making a perfect curve formation, and the bounce happened right from the support, which we had discussed last week also. So one can initiate a buy at the present level. The stop loss will be 3250, which is almost 30 points away from the present level. But I think now this counter is heading for 3400 very soon.
okay, 3400 very soon for TCS is the word from Kunal. Let's move on and Harsh, JK Lakshmi Cements, this one will focus on the back of its numbers as well.
Yes, absolutely, Vinny, and under pressure, and how we're looking at revenue, which is up 16% on a year-on-year basis. But look at that margin number and EBITDA number. EBITDA, in fact, coming off quite sharply, 28+% down on a year-on-year basis, coming in at 233 crore versus the 325 crore number same time last year. And EBITDA margins therefore contracted by 7.8% on a year-on-year basis, coming down from 20% all the way to 12.5%. So a very strong contraction seen on the margin front, and what we're therefore seeing is profit after tax coming off sharply, down almost 40% on a year-on-year basis. So profit after tax coming down from 188 crore to 114 crore, and that's what's really causing the pressure on the stock, down nearly 7% in trade.
Let's move on to stock number 18 then, and we have VA Tech that is in focus on the back of its numbers. Mixed set of numbers in Q4 for the company. The overhang that was for the Genco projects receivable has been completed. Let's take a look at the numbers. Revenues up by 4% on a year-on-year basis, coming in at 935 crores. Profits without the exceptional item is seeing a growth of around 53%, while the operating performance also seems to be strong over there, because EBITDA has seen a growth of almost 50%, coming in at 108 crores, while margins, a sharp expansion there as well, 11.7% versus 8.2%. Yes, there's one factor that you should see is that when you adjust that exceptional item, that comes in with a loss then of 111 crores, then you see in the bottom line, versus a profit last year of 46 crores. Key highlights, obviously receivables and other current assets pertaining to Genco projects were written off to the tune of 289 crores. Flat top line growth mainly driven by the higher EP project mix and muted European growth, and margins were driven by the execution efficiency, mix of the new projects, and order book for the company standing at 13,220 crores. Gross debt is also down by 50% on a year-on-year basis. So yes, keeping an eye out on what it will today.
Alright, moving on, let's talk about Power Grid. At one point in time, this particular counter was trading higher by about 2%, taking the stock to the highest level since April 26. Right now, given up most of those gains. However, the company reported a 4% rise in their Q4 profits, coming in at around 4,320 crore rupees. Also, Power Grid said that they were aided by stronger demand for electricity, which outstripped their high costs. Also, they said that during the quarter, the early onset of summer and rising temperatures aided in a jump in the power's demand and pushing power transmitters to stretch their capacities to bridge the surge. But however, as I said, the stock has given up all of those morning gains, right now trading barely in the positive territory.
Let's move on and talk about Tech Mahindra on the charts then. Kunal, what are the indications you're getting for this one? In the last 6 months, we're seeing almost a 4-5% move. Not managing to cross those levels of, around the 1,000 mark, that 1,140-50 mark. Above that, can we expect a good up move now? It's nearing those levels, but still never managed to cross that very fast.
See, you highlighted very perfectly about the levels, and these levels are valid since June 2022. Mind you, it's been a year this counter is in sideways consolidation. The resistance is placed at around 1160 and the support is right near to 980 levels, and there have been more than 5 trades so far. Recently, what I can see on the chart is a near-term breakout on the chart, which was at 985. Now counter is heading for 1160. So it's a very short-term beautiful trade. one can initiate a buy at the present level. Stop loss will be 1060, and the first target can be 1160. And post 1160, yes, the doors will open for 1400 also. We'll keep watching out for it, but for time being, it's a short-term trade for 50 points upside.
Moving on, Ankita, VRL Logistics, why is this one making it to your list?
Share that is on the back of numbers, and what a move coming in the stock. Like, it's seeing an uptick of almost 7% in trade. Now this stock has been trading pretty flat in the last 1 month, but seeing a strong uptick on the back of results. The company has reported over threefold surge in the net profits. The net profit is up almost 243% on a year-on-year basis. It's coming at 193 crores versus 56 crores last year. The revenue is also up 17% on a year-on-year basis at 98 crores versus 594 crores last year. The EBITDA margin, however, was down 301 basis points on a year-on-year basis. And the EBITDA was also down 0.7% on a year-on-year basis. Also, the board has recommended a final dividend at the rate of ₹5. And on the back of that, VRL Logistics is seeing a major uptick today in trade.
So let's move on and talk about Dodla Dairy on their numbers. Harsh, how are they looking like this time?
Well, it was set and pressured by a couple of factors. We'll talk about that. Let's speak about the revenue first. Revenue was up, in fact, very healthy, 23% higher on year-on-year basis, coming in at 724 crore. We're seeing margins, though, in contraction mode, and EBITDA came in at 34 crore versus 47 crore same time last year, 28% down. In fact, EBITDA margins have come in at 4.6%, lowest margin number since March of 2020 for Dodla Dairy, and you can see the initial pressure on the stock at the start of today. But let's talk more about with regard to what's causing the pressure on margins. So, well, it's a muted flush season and heat wave, which is impacting milk production, keeping milk prices higher, and even though the growth on the procurement side was quite healthy at 10%, you could see a steep increase in the input prices, and therefore margins, the gross margins contracted by 4% on a year-on-year basis. 21% is where the gross margins came in at. That's where the pressure point currently is at. Profit after tax contracting 44% on a year-on-year basis to 23 crore from that 40 crore number. So, largely pressure on the stock, but now it's probably trading at the day's high.
All right, moving on then. Tata Power. Kunal, how is this one looking on the charts? Do you see it powering ahead anytime soon?
Absolutely. The first breakout of this counter was on 11th May, and that level was around 203. Post that, the counter went up to almost 215, retested the same zone in the previous session, and today it's trading near to the high of the day. So yes, one can initiate a buy on this. The stop loss will be 202. The first target from here can be 220 to watch out in next 10 to 11 days, and post that I think we will keep revising the targets higher side. But for time being, stop loss being 201.
On Tata Power. Let's move on and then talk about Siemens, and this one is in focus because the management actually had a con call analyst meet where they highlighted certain points in terms of the clarification, especially for the sales of the motor business of the company. Now what they're saying is the motors market growth will be lower than the other segments. They believe that the business has grown at in the last 5 years. When they're looking at it, it's grown in single digits over the last 5 years, and they want to move out of the motor business and do not see any synergies with the existing business. So that's their plan, and they prefer to actually focus on something like mobility, EV, smart pace infra, as well as digitalization. And moving out of the motor business will not impact the margins of the company and will make up for they will make up for it via digitalization, is what the management is highlighting. Other than that, other key highlights that they've spoken about is that they're confident to meet the required margin of 9,000 HP locomotives, and opportunities in railways is quite huge, especially given the electrification, signaling station redevelopment, etc. But the impact of this mainly is coming in because the company says they will be getting out of their motor business. They do not see any significant benefit, and that is why the stock is seeing that pressure today, down 9.68%. But let's move on then and talk about the next stock that is in focus. And Kunal, Maruti is the stock that we're going to talk about next. And on the charts, what are you indicating in terms of Maruti? Where do we see them moving going forward for Maruti? What is it that you're looking at?
So again, I think a couple of weeks back we had discussed about this counter when it was giving the first fresh breakout of 8,900. Post that, that counter went up to almost 9,300, retested the same breakout zone in the previous session, and today it's trading near to the high of the day. So yes, one can initiate a buy on this. I think this symmetrical triangle formation breakout target, which was placed at around 9,600, is yet to be achieved. So the stop loss for time being will be 9,000. One can initiate a buy with the target of 9,600 in next 15 to 20 days.
Let's move on and talk about Gland Pharma. The numbers came out and that was last week. But you know, there's a trend that has always come up is that Gland Pharma always sees a fall coming in post its numbers. Friday also we saw a sharp fall. Today also again we're seeing a sharp fall coming in the stock as well, and that has continued. That's been the trend for almost every quarter that we've seen post the listing. The company sees a fall post their numbers. Morgan Stanley has come out with a note on that. They are saying that they're maintaining an equal rate rating from, they've actually downgraded the stock to an equal weight from a previous overweight rating, given a target price of 1,035 rupees per share, which implies a 2.9% decrease from their last price. So yes, we are seeing some pressure coming in on Gland Pharma as well, and you know, not an exciting set of numbers. The street has never given it a bit of thumbs up when you see in terms of the numbers. That pressure has continued even today, down almost 18%. Even on Friday it was down more than 15% as well. So that pressure is continuing for the stock. Let's move on.